good morning, good afternoon, and good evening to you all. I am Felix Israel from Bangayebi Tabenda, and you are welcome to this PBB Business and Investment Forum, the first of its kind. I want to specially thank the CEO and founder of Passport Beyond Borders. As some introduced me, the husband to the CEO of PBB. That's Kimberly Sirinde. Thank you very much for giving us your platform to do this. I also want to thank our very first guest speaker for today, Andrew. And as I said, and I've discussed with most of you, this is just to share knowledge. Just to put that disclaimer out there, just to share knowledge which I have learned in the last week or so from Andrew on in terms of investments, what we need to know, what we need to learn, and why we need to invest for the future. So I just want to beg on you all, just listen on to him. We are going to have about 15 minutes at the end of the session to ask questions.
Thank you, Felix. Good afternoon, good morning, and good evening to everyone. I'm happy to be here to share my knowledge with you. Like Felix said, it's pretty much a session to share knowledge. I think we're in that position where we need to start looking towards the future and how we build out our future. Not necessarily now about what we do now, but more about how we grow our money for the future. So without wasting time, I would probably just go straight onto my slide. I'll try and share my screen if you could. So I'll start by first of all introducing myself. I know we already know, the what we're going to be talking about, but what I'm going to be focusing more is around investing in stocks and shares, growing our money per se. I know that generally we are of the view, and I'm sure most of us are already of the view of trying to save and put money away. But if you understand how things are going, savings over time, inflation is just going to erode the value you have on your savings. So your cash would still be cash, but the value may be eroded over time. So you'd have to look for ways to grow it. So just to tell you a bit about myself. As you all know me, I'm Andrew Washili. I am Nigerian by heritage, from Anambra State in Nigeria, but also by birth I'm British. So I was born in Scotland here in the United Kingdom. I am a credit risk manager with Homes England, a public agency or government body in the UK. And my experience in credit risk management has spanned over a 10-year period in different sectors, so financial services, public sector, and real estate. Things I do in my spare time, I have quite a lot of things I do in my spare time, so I try to be very dynamic about it rather than keep myself rigid. But just to mention a few of them, I do love to read. I bake. I play board games and video games too, just to ease off the stress sometimes with work. So that is me in general. At some point, I'll get to know you guys as we go through the session with the questions as they come on. All right. So primarily growing our money. So when we talk about growing our money, you're talking about you have funds already in existence, and what you're looking to do is actually build on that. So we build wealth for what? The future. There are various reasons why we would build wealth, to be honest, and generally we'll build wealth for the future. So there are various ways to grow our wealth. So some of you may even already be aware of it. But you have investing in stocks, real estate, bonds, mutual funds, even business ideas and certain products. Sometimes you do that. Somebody comes with a business idea, you want to invest in it, you want to grow it, you get your returns on that. That's the way to grow money. Forex trading, some people may do that, But the main thing is, if you want to grow your money, you must have an interest. So whichever one floats your boat. So any of these things I've mentioned or even more may float your boat, and whichever of them floats your boat, it is important to know that you have a sound knowledge of what you're doing and what you're going into, what you want to invest in, and how you want to grow your money. Without knowledge, you will get stuck. And at some point, you would actually be losing money, because what you're doing is you're gambling and not actually intelligently investing. So what is investing in stocks and shares? It's just buying a piece of a company, to be more precise. There's no other way to say it. You buy a piece of a company, and that is what it is. But over time, you either continue to buy a piece of that company, or you buy a piece of different companies and diversify your portfolio. But one thing to bear in mind is that it is very important that the attention, or the amount of research you put into knowing about a business as an entity is also the same knowledge required if you're going to buy a piece of that business, because the business is still going to function the same way. So if I'm buying a piece of a business and that business is going to be performing very well over time, and that's why I'm investing in it, it means that that share I'm buying of the business would also be performing. But if that business is going to fail over time, it means that that share I'm actually buying is also going to fail. So whatever research you're doing or knowledge you have is actually important, that you know that the same knowledge and understanding you actually apply in understanding an entire business is the same you would apply in, understanding, in trying to buy a piece of a business. There are key things when you're looking to grow money. Like I said, knowledge is one. So in everything we do in terms of how we grow our money, the knowledge you gain through research, the knowledge you gain through reading, the knowledge you gain through, there's what we call, local knowledge. So you probably know about a business. So I'll give you an example. You live, in your local area. There's a particular business in your local area that has probably been trading over the last 15 years. Say you grew up in that area and the business has been trading for the last 30 years, for instance, and you grew up knowing that business at that point. Now you've known every single person that has worked in that business, or the people that have worked in that business, the people that have run the business, how they have run the business. And for some reason, this business now decides to go public and be listed. Now, having that local knowledge gives you an some kind of information that probably others won't have, because you know what that product is, you know what they do, you know how they go about it, and those are also vital information. So as much as you read, as much as you research, local knowledge sometimes is also very helpful. The other thing is your goal and investment strategy. So your goal and investment strategy is very, very important, because what happens with your goal and investment strategy is that it's actually what defines how you go about your investments. So I have a goal of what I want to achieve. This is what I want to grow my money to do. I have to have a strategy behind it to achieve that goal. It's just like having a a plan without an action. That is never going to work. You have to have a plan and you have to have an action to give you a direction, right? Okay, so what are the things we require for stock investing and trading? Like I said earlier on, knowledge is very important. So what you know, how you know it, how you apply it, your understanding of it is key to actually making informed and intelligent decisions when buying stocks. If you're writing down, it's fine to write down, but I would definitely share this slide so it has all the details, which is why I actually put all the details into it, so that you can use that afterwards. And if you have any questions, you can always come back to me. So a lot of the time when you have knowledge, once you've got knowledge, once you've prepared yourself in terms of what you know, how much you understand about that business you're going to invest in, or those companies you're going to invest in, what that does is that it always puts you ahead of the curve. Because say, for instance, now in the current environment we find ourselves, right? If you have done your investments about a business about, let's say, 3 years ago or 2 years ago or 5 years ago, for instance, now at some point when these shares were actually, bearish per se, you would see it as an opportunity to either step in, knowing that you've done your investment research and you have a good knowledge of what you're about to do. You'll be confident to know when to go into the market, buy a share or buy shares, and then based on your investment strategy, decide to either hold for a short-term period, long-term, or medium-term. And that is what is key. So knowledge is very important about that. And what does that do for us? Your knowledge allows you to know when to buy a stock. Am I buying a stock at a bargain, or am I buying it at just too high a price? Those are things to bear in mind. Also, we talk about a plan. I said that before, but a plan and investment goal is very important. So we all have different plans, but in drawing up a goal, we already know what our goals are. Is it for the future? In this case, we're talking about the future, but people would have different goals. So as a person, I have different goals and I have different investment strategies to support each of these goals. And that is my personal way of running my portfolio. What you'd find out is that with a plan, and an investment goal, what that does for you is that it clearly defines how you align your strategy to your goals. So if your goal is for your kids' tuition fee, if your goal is for financial independence, if it's basically building wealth for the next generation, you know exactly how you want to plan out your investing in stocks, what kind of stocks you want to buy, the reason why you want to buy them, because there are stocks that are growth stocks. They are purely just to grow, gain value on them, appreciate, and then you sell. There are some stocks you hold because you want to get the dividends over time that you acquire from them. And there are some other stocks, they're quite volatile, but you want to take advantage of that volatility. So you buy at a very low point and then it goes 30, 40% up and then you dispose of it. Those are different strategies applied by different individuals. But in actually defining your strategy, one, you have to know what your goal is. It is very key to know what your goal is. Two, you need to know your term or tenure of what you want to do. So is it a short term? Is it going to be short term? Is it going to be long term? Or is it going to be medium term? So when I say short term, you're looking at anything between a day and maybe 12 months, let's say. Sometimes 2 years. It depends on how you want to go about it. Medium, I will class between 3 to 5 years, and long term, I'll say beyond 5 years. So this would determine what kind of strategy you want to put in place. The other thing that also determines your strategy is actually your risk appetite, which is very key. Every individual has a different level of risk tolerance. Some are averse to risk and some are okay with it. So personally, over my experience of investing, I am very comfortable with risk because I understand the risk I want to go into. I know how I apportion my portfolio to these risks. And then I also am fully aware of the fact that I am not moved by whatever I see because I know what I've looked at in terms of the risk. So based on my knowledge, the actions or decisions I take tend to make me the investments I make less risky. I'm not saying they're not risky. Every investment is risky, but it makes it less risky because I know what I'm doing. So those three things are quite key to your investment strategy and how you build that. There's another thing that is quite key, your investment and trading psychology. So a lot of the time we trade, or we do certain things. And sometimes you find out that, and I'll give you an instance, you go into to buy, let's say they are, let's use a common product, let's say Gucci, for instance, and you want to go buy Gucci products, maybe a Gucci bag. Let's put that as an example. You go in and you see it's very expensive. Now, you can choose to buy it at that expensive point. So let's say I'm going to use pounds now, £1,000. You can choose to buy it at £1,000. But then you wouldn't want to do that. You would want to wait for it to go into sale so that it comes back to £600 before you buy it. Now, the funny thing is that you might decide then to buy it at £600 only for it to go back to go down to £400 later. And the natural feel as human beings is that you have a level of regret because you feel I would have just waited a bit more so that it goes to 400 and then I can pick it. And then for you, you feel, oh yeah, that's it. I've made a very good buy. But the truth about it is all about psychology. How do you feel after you've made a decision and you see the result? Do you decide to then immediately react or do you proactively approach it? Those are the key things that are important in your psychology. What do you call it? Your trading psychology. So courage, confidence, patience, and discipline. These are key things in terms of your trading psychology. There are going to be news out there. There are going to be events happening out there. There are bound to be so many things going on. But what do you do when these events are going on? Do you then react or do you proactively approach it? So would you just, because of what's going on, decide to sell, or would you hold, or would you actually buy more? These are just the kind of decisions that you make based on your trading psychology. The other thing you'd require are actually what do you call it? Your funds and a trading platform. And I will come to trading platform at some point. Thank you. I'll come to trading platform at some point. But for now, I'd say funds are definitely required. And for me to go into investing, I always ensure that I have a level of liquidity. So the cash I'm going to be using to invest is not cash that I need for liquidity. So there has to be money aside for emergencies and all that. And then the excess of that is what you actually put into investing. How do I make my decisions? So my decisions are purely supported by my investment methodology, and which is based on my investment strategy and goals. So the knowledge, like I said, I've already done my research. I do a lot of research. I do a lot of reading. I also ensure that I stick to certain kind of sectors that I understand very well. So in this case, I have a good knowledge about the agro sector. I have a very good knowledge about the consumer goods sector, cyclical and non-cyclical consumer goods sectors. I have a very good knowledge about it. So if I want to invest, I will invest in them. I'm not saying that I cannot invest in tech, and I'm not saying I won't invest in other sectors. But for me to invest in other sectors, I'll have to have a very good knowledge of that. So I'll make a conscious effort to read a bit more, understand the sector before I actually go into it. Once I feel comfortable that I have enough knowledge, then I'll go into it. And then obviously my investment strategies are important to my decision making. So what do I do with the shares, with the purchases I'm doing? Do I want to hold it long term based on my strategy? Do I want to keep it, short term and then just turn over, do trading? But the thing is that I have an investment strategy of long term, and Felix is aware of that because we've had conversations around that. But recently, I started thinking about day trading, and I've started reading about it because I feel that there are opportunities in the market for day trading. So basically, those 2, 3, 4, sometimes 10% you make in a day. Sometimes it could be even in a space of maybe 3, 4 days, you have a 30% jump. Those things are quite are opportunities, and I see them, and sometimes I say to myself, okay, it's not my strategy, I don't know much about it, so I'm not going into it. But at the moment, I say to myself, there are opportunities there, and I want to read about it and know more about it, so I'll have to go acquire knowledge from that. So what are the things I consider? These are things that are very key in terms of what I consider during my decision making. So I look at financial information and non-financial information about businesses. So like I said earlier on, there are things about businesses, your local knowledge sometimes. What do the businesses produce? How much customers do they have? Do you know a bit about their management? So when I do my analysis, I look at the trading performance of the business, historic trading performance of the business, the persistence of its product. So how long can its product last in terms of being useful to its consumers? We are in an environment where technology affects everything in terms of change. How is that product going to be impacted by technology? So I'll give you an instance for it. I'll give you an example. Now, Coca-Cola has been in existence since what, I think 1886, if I'm correct. Now, that product, probably each and every one of us has had Coca-Cola to date. I'm almost certain. Some people have probably gone off it because of diet and all that, but each and every one of us has had Coca-Cola to date. And if you look at it in the real sense of it, Coca-Cola still sells and still continues to make very strong results year on year because they have a product that is actually there that meets the demand of customers. So when you look at it from that angle, you realize that actually that's a strong business. Again, when you look at the CEOs or past leaders of and current leader of what do you call it, Coca-Cola, they've also been very experienced in the sector. So the current CEO, for instance, of Coca-Cola used to be the CEO of Johnson & Johnson, and Johnson & Johnson had a very good track record. So he's coming to Coca-Cola. I'm very confident about that because he knows a lot about the sector and how things operate. That is very, very important. Market coverage, how much coverage does that product of that company or business have? And are there threats from new entrants to this business? Because sometimes, again, threat of new entrants could be very, very, could be a potential issue for businesses like that. So those are what I look at. And then the other thing I look at is events. How do events and major announcements impact my investment decision-making process? For long-term investments, short-term investments, medium-term investments, what is going out there? So an example now is the current epidemic we have right now, or the current situation we're facing. it has made a lot of things change. A lot of our investment decisions have changed. Some of us have decided, okay, I'm not going to buy, I'm going to wait, sit down, hold my cash and see what happens at the end of the year, or at a certain point when I'm certain around how businesses or the economy is going to be coming back or recovering. And in this place, I just want to kind of give an example. So it's just like I said before, you want to buy something, you just basically say to yourself, oh, I'm not going to buy it now until it comes to this price, because you're looking to get it at sale. So it is those things that help us to make decisions, you know, in terms of investment. So looking at my portfolio to date, I was just an example, I was looking at my portfolio. My portfolio as at March, so these were stocks I bought in March, as at I think May, sorry. As at May, the portfolio was up 35%. But then as I'm speaking to you today, my portfolio is at 12%. Now, I have a quick question to ask each and every one of you, and if anyone can just, you know, give me a response, that would be great. If you were in my position, what would you do? So a portfolio that after I bought it, say a month after I bought it, or 2 months, or let's say a month and a half after I bought it, it was up 35%. And then we're talking about 3 months down the line, you're now at 12%. So I've lost some of that value. If you were in my position, what would you do?
You need to hold on. You need to hold on to it, because there will be rebound based on the market and what's going on. You know, offloading now wouldn't be the best option for you.
Okay. All right. Anybody else? Okay. So, Kachi, you're right. You know, I don't think there's any wrong response to this, but personally, my response is going to be my decisions will be based on my investment strategy. So that is what is key. So if my investment strategy is that I'm looking to basically hold those particular stocks short term, then I probably should have sold at 35% and not waited until now. But your investment strategy is always key to your decision making on the stocks you buy, sell, and hold on to. Okay. All right. So I think I've pretty much gone through everything I wanted to say. I would share this slide with you. So I thought there's some resources, you know, that you might find useful in terms of trying to help you gain knowledge about, you know, what it is you need to do in terms of investing in stocks, how you want to invest in it. So value investing, day trading. And if you do have questions after that, I'll be happy to basically discuss this with you after this session, or maybe on a, you know, on a day when you feel free and all that, or that a day that is convenient for all of us. And what would happen is, you know, the more you read this, and a lot of these books that I'm actually recommending or suggesting are books that I have read and I've gained value from them. They actually helped me build up my investment strategy, because they provide different strategies, and I've taken strategies that I feel comfortable with out of these books and out of some of these resources. So Investopedia, for instance, is a very good website for finance and things you want to find out. But I have a friend who has a website who I've also put on there that basically he does similar stuff like I do, educating people and trying to help people on you know, gaining knowledge about investing in the stock market. He has stuff on his website which I've read and I've found, you know, to add value, and I would suggest that you do that. I think, you know, that is pretty much it from me. You know, if you have any questions, then I'm happy to take them.
Thank you very much, Andrew, for that. Just as you did. So I know many of you would have questions, and Kachi, I'll give you the floor shortly. But just one thing which I know currently we have the current market scenario, which I think you and I have spoken about this broadly. Maybe can you throw more light on that in relation to your trading psychology and what you've done within this last 1 week that has maybe changed your portfolio or your mindset in terms of investing in shares?
Yeah. So, like I said, my investment strategy as at today is pretty much long term. And what had happened is that I had bought stocks which put my portfolio up at 35%. which was great because I had done a good research about these companies and I know them very well inside out because I've basically followed them and done a lot of analysis. But what had happened, or what I did not envisage would happen, was I believe some of us realized that the market picked up quite quickly, to the point that there were huge returns. Even like Tesla went from trading at almost $800 and something to $1,016 a share in a matter of a day. So these were happening across the market, and then overnight the market slumped again. Now, what happened was when the market slumped, because I had already done my research, I had said to myself, this is the price at which I am going to buy. So if these stocks start to fall again, I would put my purchase price at a particular level. And if it hits that level, I would buy. And so what that did for me is that by the time I did that, even though my portfolio was falling, or the value was falling, because I had gone in and bought at a lower rate, which I had put in, it then evened out the average on my portfolio, which meant that my portfolio remained stable. So at some point, my portfolio has not really fallen per se. It has held stable for quite a while at 12% over the last, I think, 2 to 3 weeks. It has not dropped beyond that. And that is because I have used the idea of averaging out my positions.
Okay, thank you. So I'll just open it up to everyone. Please feel free to just introduce yourself and then write on with your question. Thank you.
Okay. Thank you, Felix, and thank you, Andrew, for this elaborate explanation and training on this. I think it couldn't have come at a better time, right? I thank you so very much. I guess your pitch is well, package is full. By the way, I'm from Anambra State, just for you to know. So we connect later. And
All right.
I really speak in our local language, so that
all right, no problem.
let me know where you're from. All right.
Yes,
but I
yes,
speak
that's fine.
in Kuala Lumpur. I'm a finance manager. So Felix is my friend, and as well as his wife, we are like a family as well, right? So I'm happy to join in this presentation. Now, you've said a couple of things, so I know other participants would have some questions to ask, but just a few things for me. I think because of time, you probably didn't touch on the platform, right? That platform, maybe you share that later, another session, or maybe we talk about it either from a slide on what it is, the plan should be, because I'm more interested on the platform in such a way that you don't go do one by one sort of stock. You maybe have a portfolio in one particular platform, and then you can easily monitor that. I know Felix had already shared something with me, but look, I danced around it a little bit, but got a bit confused. So it's good to have the better knowledge on how that works.
How to use. Yes, I can do a session on that if that is required. Yes. But I think just to make a point around that, the trading platforms might vary from jurisdiction to jurisdiction only because there are regulations around them. So if it's anyone that has to do with the UK, for instance, there are some platforms that can go across jurisdictions. Then I'm happy to put a training on what you should look at. Yeah.
Great, and you just picked up jurisdiction from my mouth, because I was going to talk about it. I was going to say something about when you want to sell, where you want to buy, or where you earn dividend and things like that. In terms of jurisdiction, if you're on a particular platform, are there tax issues? Are there tax exposures? I mean, I do not want to do something in a US company, right? Buy a US company stock and I sell. I probably make profit or whatever, or I get dividend. And maybe one day I fly into JFK and somebody says, "Oh, guy, you are owing us some tax, something and something like that." That kind of thing. So it's good to clarify if there will be any exposure. I know when I used to have GE stocks, for us employees then, we buy, we sell, it's just a little charge, Peters, that the agents that does it as for employees we're gonna take. But you do that and you get your money in the next 2 days or so. It drops in your dollar account, that kind of thing, right? So it's so seamless, no issues. But it's good to know when you delve into full-time investment like you just presented, to be sure what are the jurisdictions, what exposures would you have, and things like that, so that somebody would always be aware that there will be risk, or there will be some charges, or this is how you're gonna file. Sometimes when you're filling some document, they say, "Are you a US something? Did you earn some fees or income and things like that?" So it's good to clarify. That's one question. The other piece is, I know you talked about knowledge, local knowledge of company, right? Probably studying that company for some, a while to know exactly their performance, right? I guess you do like maybe a 6 months, see the fluctuation and all that. But I'm saying, putting aside knowledge of the company and the environment, what other indices do you look at? Will it be the product, like you talked about? People must eat. People would drink Coca-Cola. They will always be need to have sugar in our system and all that. Do you look at that and say, this product, right now in the present environment of COVID-19, which seems to gonna be with us for a while, it's not going away, even if we have vaccine. Because I discuss with people, if you have malaria today, that you have medicine for malaria doesn't stop you, or doesn't make you to say, I want to get malaria because I have medicine. No. So I think COVID-19 will be with us for a while, and with the mortality rate, what that means, we have problems in our hands. Therefore, I would think in this environment, going into a healthcare, health management sort of thing would be the way to go. And then software, internet things, education is going internet, so many of those things. So I'm looking at, would product drive more of your decision making today than the environment or understanding of a company? Because mostly, if you go to Boeing now, you know what's going to happen in airlines and things like that. So, would that drive the sort of decision you're going to make in what you want to invest in? Maybe I'll stop here and then allow others to contribute here.
Okay, so I'll answer the two questions quickly. So I'll take the first one, which is around if you bought shares, in a different jurisdiction. So I have a platform I use here in the UK. I buy shares that are in US companies. Now, the fact that you invest in a US company doesn't mean that you'll be taxed by the US, for instance. Your taxes will be applicable to the jurisdiction where you reside in, and would be based on the laws that govern the jurisdiction where you reside in. So in my case, I'm governed by the UK law, tax laws. So whatever happens is, if I make my profits and all that, it will be based and classed on where I currently find myself from a tax perspective within the UK. If I leave the UK tomorrow and move to, say, Malaysia, that would change, because I no longer reside in the UK. I would now be governed by the laws, tax laws of Malaysia. So that is not something to worry about. And that actually is a good question, so that you have clarity around it. So I hope that answers your question. So that's one. So the second question around the metrics I use. Well, it's not just about products. So like I mentioned a few things. I said products, persistent product is one. So you won't look at these things in isolation. So financial and non-financial information are quite key when you make your assessments. So products, persistence of products is very important, as well as the track record of the management running the business too. So if the management has track record of running the business, then it's basically like saying my money are in safe hands. So if a management knows how to run the business and they have a track record of running the business well, or even a track record of being in a similar sector and have run similar businesses fine, then you know your money is in safe hands. So you're fine with that. Again, there are other things you look at. You look at historic performances. As a finance manager, there are a number of finance things you look at. So I look at balance sheet, for instance. I want to know how strong their balance sheet is. I want to know how strong their current ratios are. I want to also know how strong their book value is. I want to know how strong. There are a number of factors I look at. Then I also look at their profitability over time. I also look at cash flow, because cash is always king. So these are things that I would look at, but there is no one metric that can be treated in isolation to say this is what I would use to ascertain a business. Now, you made the point about the healthcare sector, software. Some people would go into it now, and they will go into it now for, I'll say, the medium term, because nobody is certain about the environment. And if you ask me, I can't tell you what decision I'm going to make about going into the healthcare because I haven't done my homework about healthcare, but I definitely know that the healthcare is doing well now, one. I also know that clinical trials, pharmaceuticals and those that do clinical trials are doing very well now. And these are all because of where things are going. But is that my investment strategy? No. So I wouldn't go outside my investment strategy until I have good knowledge of it. It is very important to know where you draw your boundaries when you're investing, because if you dip and dive into stuff because you feel it's an opportunity to make money, you could lose everything you've made before. So it's very key. That is why I said defining your investment strategy and goals is important. And once anything aligns to your investment strategy, by all means, delve into it. Look into it very well, read up and research more about it, and then invest in it. There's no problem. For instance, I stuck to agro and consumer goods because I know the cycle and I know it very well. I have not really done healthcare, IT tech. There's a lot that is involved in it before the business. So those things are things that you have to have very good knowledge of and be certain about before you delve into it. The only people that tend to make money out of all these things quickly is those people who do what we call day trading or short term. But there's a different methodology to day trading. They use charts and patterns to actually do the analysis on the trading screen. And that helps them to guide them on how people are actually trading on those stocks, and then they eventually make their profits off that. But that's a completely different strategy. Yep. Hi.
Hi, I'm Manka. I'm joining in from the United Kingdom.
Okay.
Hi, everyone.
Sorry, I'm listening to you. I'm just trying to
question,
forward stuff to my email so that when it cuts off, I can just join back in. So go ahead. I'm listening. Definitely listening. Okay.
I'm asking, as a novice in the stocks and shares business, what would you recommend if I do my research and I'm interested in this one company that I feel is good enough to give me the return that I want? Would you advise investing a huge amount of money in such a company?
I would probably say not more than 10% of an exposure to that particular business. Now, as time goes on, and I'm saying that to you. So right now, I've only invested in 3 companies. I've not invested in more than 3 companies in my portfolio. One is about 40% of my portfolio. The other one is about 30-something%, and I can't remember the other one. And it varies because as I deem fit and I see when things move and I'm more positive about one than the other, I tend to buy more. Then that changes. And if prices move, then it changes the value of where the portfolio sits. But for a start, I would probably say maybe you want to stick to between 5 and 10%, not more than 10%.
Okay.
And then as you go on and become, because one thing you need to bear in mind is that this is, so my being able to do this today has taken, I don't know, probably the best time of my career to get my experience around this. So my exposure to the stock market started when I was about 15, 16, because of my uncle who basically invested in. And I remember the first set of shares I had was my dad and mom who bought it. And I still remember very well, it was bought about 1 naira 20 kobo at the time. Afribank, Kachi will remember Afribank. And by the time
it's gone underground now.
Exactly. But then by the time I sold for almost about 100, 110, 120 naira. So that was a lot in terms of movement. So, I've had that experience over time as a result of an interest and passion. And this has been as a result of, getting involved in a daily practice. I practice every day. I read every day. I apply the knowledge I gain. Don't get me wrong. I have lost on my portfolio several times, but because of my trading strategy, I hang in there and the portfolio rebounds. Sometimes it doesn't rebound and I have to just cut my losses and walk away. But I've come to a point where I'm now very confident about the decisions I make. And I'm like, well, even if it goes down, I'm not worried. It's my strategy is long term. Where I get worried is if I actually wanted to hold that position, say for 6 months, and then I've gone in and found out that at 6 months, it's still not got to where I want it to go. Then I have to make that decision of whether to step out or stay in. So, yeah.
I'm Jonas from Cameroon. Felix is a brother and friend. So he, of course, just like Akuma, Dr. Manka, I am a novice. And as well as, since there are risks in this, a lot of risks in this, and I just want to find out if what are the securities? At what level do the securities cover? In terms, in case you step into this platform, for example, in the industry of shares and stocks, buying shares and stocks, what are the securities? Any?
So when you say securities, if you could probably
maybe like how protected are you? To what level?
So the moment you go into the stock market, there is no cushion. Let me put it that way. To be fair, there is no cushion to give you any protection against anything. So again, you're not even protected by, say, as in the UK, for instance, we would have what we call the Financial Services Compensation Scheme, which basically protects your savings with banks. In this case, there is no form of protection. So, which is why the point is that when you go in, you're always told investments have risks, or risks comes with investments, and you should be fully aware of what you're doing. But what I say to people is that there are always risks. But if you actually, let's put it this way, what is it you do, if you don't mind me asking, as a professional?
Okay, actually, I'm administration manager in an international school, so I do management and operations.
Good. Okay. So let's say, for instance, right, I told you to invest in your school, right?
Yeah.
If it was listed on the stock market. Now, it's insider trading, don't get me wrong, but I'm just giving you an example, right?
Yeah.
You would definitely be probably more confident in investing in your school than you will be in investing in my company. And the reason about that is because you know your school very well, and you know the worst case scenario that could happen. Now, let's flip that and take that back now to knowledge. If you do your research about a company properly, if you do your homework about a company properly, then what that does for you is that it gives you that knowledge you need to make that informed decision, that even when the portfolio looks like it's going the other way, you're still confident about the position you're taking. Now, let's look at the current climate. I have made decisions in stocks and buying stocks before we got into this current climate, for instance. But the current climate, I wasn't expecting it to happen. Nobody was expecting such things to happen. Now I'm caught up in a dilemma. What do I do? Do I sell because things are going, or do I buy more? What action do I take? Now, I have said to myself, and I was saying to Felix the other day, I think I might take a pause. And the reason why I want to take a pause is that I've never come across this before. I saw the recession. I know how the recession went. I understand the recession. But this is slightly different. It is not just the recession. It's the recession and an outbreak. So there are two components to it. Now, do I know how businesses are going to perform post 2020? I don't know. I have not seen quarterly results of businesses as per what has happened during the lockdown period. So I don't know. So I want to wait to see what happens in Q2, Q3, possibly Q4 before I even start putting money back in. But what am I doing in the meantime? I am putting money away. So if I was supposed to invest, say, £300 every month, I have not stopped putting that £300 away. I still put it away in an account, because what it means is that by the end of, or the period when I decide to go investing, at least I still have that cash to invest. I'm not running around to look for it. But the other thing I'm still doing now is that I'm actually reading more to find out other forms. Like I said to you, I don't do day trading. Day trading has never been my strategy. But I've said that there are opportunities in day trading. So what have I decided to do? To start reading about day trading. Because what that would do for me then is that it exposes me to a new strategy, which is then probably, well, if 2020 looks a bit, somehow, I know that I don't need to invest 2020 long term, but I can do some kind of short term trades and then still make my money out of that. Again, what else comes into that? My trading psychology discipline. So if I say to myself, by the time I start trading short term, if my aim is to make £30 every day or £100 a week, once I have clicked my £100 or close to £100 a week, I stop my short-term trading. It is discipline. Those are part of your trading psychology. These are things that you build up as you go on as an investor. But what you need, my recommendation to you and those of you that are quite new to this and are still novices, this is the best time for you to actually read, acquire knowledge. And like I said to you, I can't give you an investment strategy. I can't share an investment strategy with you because your investment strategies are pretty much things you have to build yourself based on your goals, risk appetite, and a few other things that I mentioned. So I can't tell you to use my strategy because my level of risk, I have probably a higher level of tolerance for risk than you do. And you wouldn't want to be at that level of whatever I say to you to do. So it is best that you actually use this period, which is what I'm doing now, to read up a lot more, gain a lot more knowledge, and arm myself for pretty much end of 2020, 2021, because I know there are huge opportunities that are going. The stock market would always give you opportunities. The thing is, if you know when to get in and when to get out. That is what is important. And that is all about how much knowledge you know about the market and what you're doing. Okay.
Thank you very much. Thank you very much. Quite elaborate.
Hi everyone. I'm actually calling from Cameroon. So I have a couple of questions, Andrew.
Okay.
The very first one, it's for someone who's in the UK, like and the person is actually a novice, like it's not versed with stock markets and everything, but the person really wants to start investing. What are the key steps you're going to give to the person so that the person can actually take action and start investing? Like how does the person go about, I don't know, checking companies on the stock market and just like basic steps for that person? And my second question is for someone like me who is in Cameroon where we don't have a stock market, and maybe I want to invest in companies in the UK and the US. Do you have an idea on like how do I go about this? And my last two questions. The third one is, are there investment forums? Because you've mentioned the stock market and you've also mentioned the day trading, but are there other investment forums that you're looking at? What comes to my mind at this point is venture capitalist firms, because we have a lot of those platforms now. Have you kind of looked into any of that or worked with any of those platforms, maybe as an angel investor or stuff like this? And the last one is, do you belong to any investment networking group? Because I know we have some investment clubs that are around. Do you belong to any of such firms?
Okay, so maybe I'll answer your question backwards.
Okay.
From the last one upwards. So do I belong to any investment networking group? I would say yes. But these are ones like pretty much PBB now. And the reason is they are pretty much ones that I have friends who have pretty much, involved in it. Now, I tend to keep the network I get myself involved in very small. And the reason is when I make recommendations and suggestions, or I talk about stuff, people could take things different ways, and if anything goes in the other direction, people might hold you liable for what you've said. And I'm very careful about how I say things and what I say to people. And so when Felix said to me, oh, he would like me to share, the first question I asked Felix was, who are the people I'm going to be talking to? Because I want to be very certain that I don't want to be held liable. I am certain about the steps I take and the measures I take, but I can't guarantee the steps you take and the measures you take, because there's a lot of things involved in it, which is your personal commitment to, knowledge and a lot of other things that would help you trade. So sometimes it's not solely about what I tell you, but, an example, I can be taught by a teacher, but my ability to become better off than where I'm supposed to be is solely, or it's primarily my efforts, not what the teacher is, passing across to me. So those are things I consider. So in terms of groups, there are only two groups I've joined. One is PBB, and there's another one where there's a friend who invited me on board, and I agreed to come on board. And when I have ideas and knowledge, I share in the WhatsApp group that could be helpful and useful. But that's about the networking group. I've joined to date. Your third question about angel investing, venture capitalism, that is, I haven't gone into that area. I would say I did angel investing quite a long time ago, got my finger burned, and I decided to step away from it. Again, I didn't have good knowledge and I went into it. Knowledge, experience matters a lot in all these things. So with venture capital, there's a lot more that is required. It's not just about, because venture capital, if you look at it in the real sense, you're looking to fund startups primarily at some point or stage of their growth. So whether it's at the beginning, at the middle of it, or even towards the tail end before they go, public or whatever, but you're somewhere in that stage. An angel investor would usually sit at the early part of it because all you do is you're planting the seed, as they call it. So you're a seed investor, you're an angel investor. There's a lot more work and it's a lot riskier. So I'm going into, say for instance, now I'm going to be looking to fund a startup. I don't really know much about the startup. I don't know much about the sector. I'm taking a huge risk. It could go either way. It could go in my favor. It could go the other way. And if we get to a point where it goes against me, I have to write that money off. And if I don't have enough money to do that, then I lose everything. And with a business like that, you would probably continue to invest in it until it gets to that stage where it's actually able to stand on its own. So there's a lot involved in being an angel investor. There's a lot of commitment involved in it. So I'm not really in that space. Your second question was about trading platforms, if I'm correct, for people, for those of you located in Cameroon and how. Now, like I said, I can't really provide suggestions about platforms in different jurisdictions and countries, and purely because there will be regulatory reasons why certain platforms cannot operate in certain areas. That's one. Two, it's always best that you check. So like when I started doing my trading on platforms here in the UK, I had to actually go on Google and start to look at different platforms. So I came across I think it was about 7, 8 different platforms. Now, there were things that were important to me trading on a platform. I want a platform that doesn't charge commission because commissions are usually very, very expensive if they have to hit you with commissions. That's one. Two, I wanted a platform that even if they were to charge me a fee in terms of transactions, it won't be so high. So it means that it won't impact how much I have to invest. And so what happened at the end of the day is that I was able to sift that down to 2 platforms. And those are the 2 platforms I put on, and I spoke to Felix about that, Trading 212 and eToro. They are the 2 that I feel confident about. But these are primarily within the UK. Now, outside the UK, I'm not sure. There are various platforms that run outside the UK. Now, if you want to use a platform that is based in Africa, for instance, I always say be very, very, do your due diligence properly. Be thorough in your due diligence and research on the platforms, because especially it's not that I don't have trust in our platforms back in Africa, but sometimes we don't know what the underlying things are because the regulations are so light touched. They sometimes don't actually tell you what the small prints are. And by the time you started involving yourself in it, you find out that you can't back out of it, but you've committed so much to those platforms. So you need to do your due diligence about those platforms before you start to use them. Again, because you actually will be trading using Wi-Fi and all these things. Again, you want to know how strong are the bandwidths of these companies. You're using a platform, but their ability to execute, so like the ability to execute your trades immediately. So for instance, Trading 212, the moment I put my trade in, a matter of seconds, as long as there's a buyer on the other end or a seller on the other end, my deal is done, closed, knocked out. Boom, that's it, we're sorted. Now, if I'm having problems with a platform where there are delays in executing those deals, it means that prices will move. You remember that these prices are moving in a matter of split seconds. Those prices would move and I would have lost. So I have already put in the execution, but I'm not going to get the money I'm looking at because I've probably lost out in terms of timing. So again, those are things to look at. And how do you know that? A lot of things are people's reviews. So you read, you go on, check these out, read up what people say about them, their reviews about them before you actually start to use these platforms, and do your own personal thorough due diligence. Okay. And then your last question, key steps that I have taken. Okay, so before I got to this point, so I'll probably track back to help you understand how I got to this point. So my background is computer science. So I'm a graduate of computer science, have no finance background, so that everybody is aware that it's not like, I came from a finance background like Felix and Kachi that are, finance gurus. I'm pretty much from a computer science background. But my experience in credit risk has also been helpful. But prior to that, what helped me a lot is that I was able to get books that broke accounting to such a simple format for me to understand. And I found those books very helpful. There's one I still read till today. And there's another one I would probably need to find it. So that's one that I read today. It says, and what this does is that it actually helps you with understanding how you trade stocks, but looking at accounting and understanding it. So when I actually have some issues, sometimes when I look at accounts, although now I've gone past that point, I usually say to myself, look, maybe you didn't really get this. Maybe I want to go back to it and read it. So I have a lot of books. In fact, sometimes my wife says to me, man, we can build a library from the books you have. Because all these books, I'm not saying that I read all of them or I have read all of them, but I definitely know I've gone through at least all of them. And sometimes what happens is, like, we're speaking now and there might be something you raise and I'm like, I don't really know that. But I have a book that has it. I'll quickly go back to that book and make reference to it and read up that topic there and then and finish that topic and then know that I have that knowledge. So sometimes I buy these books not because I want to read them immediately, but I buy them because I need to make reference to them in the future. So I'm a book collector, if you want to put it that way. I buy books and I just stash them, but they are books that I use for information. So I think for a novice, first thing that I would say is that ensure that you start to read up and build your accounting knowledge. Accounting and finance knowledge is key to trading in the market. If you don't have that, then don't even go close to the market. Don't start, because you need to know, why is a company's balance sheet this way, or why was it this way this year and then last year it wasn't? What are the key elements of a balance sheet that you want to be looking at? The current ratios. What are the implications of a current ratio on performance of a business? What are the implications of a company having high leverage? Why would I want to invest in such company? What is the impact on cash flow? There are so many things, and all these things are things that you really need to understand. And there are books out there that can break it down. And if you need me to recommend books, I can do that. In the group chat, I can just literally put a number of books that I think will be helpful for, okay, and I'll do that then. Okay, cool. All right.
Just to add there, Andrew, two things to add, Marion, to your question, right? That of investments back home in Cameroon or in Africa. One of the things we want to try and do on this PBB Business Forum is to link up Africans and link up our friends to other business experts or investment experts like Andrew. We have somebody we are also talking with, Pascal Murasira. He's from Rwanda. And this is also one of those countries we know that it's picking up in Africa, and they are trying to really put up their systems to the standard which we expect. And he has accepted that he's going to also share his knowledge on how we can invest back home. And some of those companies or angel investors, as you put them as well, and investment forums which he's directly connected with. He's here I think in Norway, if I'm not mistaken. And I'll try to get some time and also schedule something with him. That should help us know how, maybe if we want to invest back home or in African companies or African countries, I'm sure we'll get some information from there. Then secondly, on the platform, I think I have shared the Trading 212 link to most of you. So Andrew, for Malaysia, I know there was a challenge because one of them tried to get their documents verified, but it's taking quite some time. I'm not sure why that is the case. But in Dubai, I think Fomban Eno, if you are on, you can confirm that. I think he did his as well yesterday, and he was able to log in. So this is not a sale for Trading 212, just to put out that disclaimer, okay? But this is what I've been able to learn, and I feel most of the steps which Andrew has mentioned, I was able to go through that platform, and that is the only platform I would say has ticked most of the boxes of the steps he has mentioned. So it's just, you can look at that, you can look at eToro, you can look at other platforms and see which one works best for you. Thank you.
Thanks so much, Felix and Andrew. That was really helpful. Thank you.
You're welcome.
Okay, Andrew, I think, okay, yeah, Mofa says he's waiting for feedback as well for document verification. Okay. Marion, you didn't introduce yourself.
No, she did. She did at the start, didn't she?
No,
I heard
her profession.
last
Her
time.
profession. She didn't.
Oh, okay.
Okay, just for those who don't know, Marion, I'm a finance manager with Diageo, Guinness, Cameroon, for those who are here. Felix, I hope that you're happy.
Yes.
Okay, good.
So we are going to have all these people on the call, okay?
Yeah.
A lot of finance people. So if you have any questions, please just feel free to drop them on the forum, and any of the finance experts here can pick it up and respond to you.
B, I'm Felix's older brother in the US.
Nice to meet you.
I have no finance knowledge. Initially, I wanted to study finance when I was in college, but I work in healthcare. So, first, I'm a low risk person when it comes to money. So that's why I love what he said, that you have to know what you are as far as what you want to do before you start to invest your money. I don't do stocks because for my research, I see that it takes too much time for you to study these companies, and that's time which I don't have. So I want to compliment you for saying that, because you know a lot of us from Africa, we have what people call long neck. You don't look into the company well, you don't study it well. Somebody just tells you that they made a lot of money, and you go and you take your retirement account and you put it in there. I've seen that happen to people. So that's what I wanted to say. That thank you very, very much. It just gives me confidence to know that I am okay because I don't want to invest in stocks.
No, but Imbi, you're very, very right. You know, I have, the reason why my level of risk appetite is so high is that I have, in the course of, you know, at a young age, I was able to set up, you know, back in Nigeria, a transport business. You know, sat down with it, dealt with somebody, you know, who I believe he had experience, which he did. I'm not doubting it. We ran this business together, but, you know, being, you know, where we are, some of the guys that were involved in it started thinking they were very smart and fast and wanted to kind of start cheating us out of the business. So I've gained experience over time in terms of what I do when I face certain things in terms of risk. So risk is no longer something I worry about. And it takes a lot to get to that point. So I always say to people, not until you need to understand your risk appetite, you need to understand what your goals are, and you need to understand, you know, there are safer ways to invest that you even risk less money. You know, people invest in government bonds. It's rare that you would lose money on government bonds. You might not get so much returns, but over time it accumulates and you'll be fine. You know, there are different ways to basically grow your money. But all of it comes down to what is your risk appetite. And if you think you don't have, because I can tell you the truth that there have been periods where you look at a portfolio and the portfolio is 50% down. What do you do? How do you stomach that? Do you understand? Those are things, and it comes to that, you know, exposure, your experience, your your trading psychology, your knowledge of the company, those things now start to kick in. And at that point, you become more confident about, okay, am I just going to sell? What do I do? How do I deal with this? And those are the things. So yeah.
I like that, because like for someone like me, I work for a government company and I invest in the government, like to my company,
Yeah.
which the only reason why I do that is because I'm guaranteed to never lose. But my returns, they might not be that high, but that is what I want. You know what I mean?
Exactly.
Because like every month from my paycheck, I remove an amount of money and I allocate it just for that. They do however they want to do it. I might get a small gain at the end of the year, maybe like 5%. To me, that's totally fine, because I'm looking at this like, I don't need the money now. I need the money in 20 years. So that's very, very good. So thank you very much. I really like what you said. And I mean, I respect the things that, I respect you guys, but the things that you guys talk about, to me, is just like, you know what, I don't want to deal with this. That's why we have people like you. I don't have time to know about your cash flow.
That was very brutal. That was very brutal. but honest though.
Yeah.
I love
you
that.
guys,
I love that.
I'm happy. Thank God for you people, because look, I know I cannot do it.
So one thing I picked out from there, right? There is, I think most of us here, if I talk for myself and Kachi, for example, is the same thing Baker Hughes does, our company does. We can buy shares in the company at certain discounts, and you make a lot of profit or minimal profit as well. But the essence of it, as I stated at the beginning of the forum, is that it's for us to know that we are able to do this and to be able to plan for the future. So just like my elder man said, his is like for 20 years, which means it's not even for him, but it's for his children, which is the objective of this. The investments we are doing, unless you're going into day trading, the advantage of this is that we want to invest for our future. We want to invest for our children. We want to invest for the future generation, because that's what Africans lack today. We are not economically empowered to make decisions for ourselves and to be able to challenge some of the political status quo out there. And that's because financially we are weak. So the essence of this business forum and trading experience and all these, which we'll be doing subsequently, is that knowledge should be known, and people should know you can invest in your companies, you can invest in whatever thing you want to do, but start up something, if not for you today, but for your children tomorrow. So that's the essence of it. So we have, I think 3 minutes to go. So any last words from you, Andrew?
Yes, please, I have a question.
Oh, okay.
Okay. If you don't mind, let me just quickly say what I want to say, just quickly before, I think let's bear in mind that whenever you start, it's fine. You don't have to think that you lost yesterday or you lost 2 years ago. No. If you start today, it's fine. You start tomorrow, it's fine. You start a year, as long as you know what you're doing and what you're getting into. When you start, really doesn't matter. All that matters is that you do it and you're consistent with it. Okay, question.
Thank you, Andrew.
Yeah.
Yes, please. I just want to ask, what are the methods of starting these kinds of, processes in a country like Cameroon? Small, because it doesn't even exist. People, just investing in Cameroon. Is there any way that this can be started in any way, shape, or form?
Well, I think it's quite a big thing to look at. So when I say quite a big thing to look at, there's a lot to be done. So if we look at, when you say investing in Cameroon, it means that we have to, and I think in Africa, we generally have that challenge. So I'll take Nigeria, for instance. We don't have a platform that actually, trades Nigerian stocks, to be fair. And the reason is that the regulation of the market is not as strong as it is over here in most part of the developed world. So it becomes a challenge where if I even wanted to invest in a company, I'm thinking twice, what will happen to that company tomorrow? how sure am I that the accounts they are producing are actually, what they say they are? And so there's a lot around gaining investor confidence before you can start to create a platform that actually does that back in Africa.
Because if it crashes, who's responsible?
Okay, I was just asking that because I heard you say that one of your first stocks was bought in Nigeria, and I'm just talking here with my husband and wondering, like, how do we who are trying to effect change in our country, Cameroon, even start up something like this, where,
I think you're right. It's an opportunity to look at.
Somebody must have started the process in Nigeria, and how did they start it?
It's an opportunity to look at, because if you look at years back, that we didn't have things like platforms. Can you hear me now?
Okay,
Last 60 seconds, Andrew.
Yeah,
maybe
so
just to wrap up.
Yeah, back then in Nigeria, there weren't things like we have now with platforms for crowdfunding and the rest. We didn't have them back in Africa, but we have them now. So it's an opportunity, and I definitely know it's something we can work on. But as it is, there's a lot of work to be done to have that done. And I bought my stocks in Nigeria from the normal, stockbroker rather than a platform at the tip of my finger. So again,
All right. So on behalf of Passport Beyond Borders and the CEO, Kimberly Sirinde, thank you all very much for joining us on this. I'm going to share the slides and also the video to you all via www.passportbeyondborders. And if you have any questions, please feel free to ask on the forum or ask via the Passport Beyond Borders website. Once more, thank you very much, Andrew. And thank you all as you make your decisions to invest in the future.
Thank you very much.